What if one global headline changed the direction of gold, silver, oil, and global shipping overnight? While people went about routines, 150 oil tankers were stuck. Trade routes pressured, safe haven assets flashed signals smart money never ignores. This is not just a market update. This is a turning point. Protect your wealth in uncertain times. Understand what's happening now. Before we go deeper, if you value clear breakdowns, like and subscribe to Safe Haven Wealth. Don't miss critical updates when markets move fast. Now, let's connect the dots carefully and logically. War escalation changes markets, but this time, the scale is different. Tensions in energy regions make shipping lanes vulnerable. Insurance costs jump, freight rates spike. Oil supply becomes about transportation risk, not just production. When 150 tankers are delayed, global energy markets feel pressure. Energy is the backbone of everything. Higher oil prices increase transportation, manufacturing, and food costs, raising inflation expectations. When inflation rises during instability, investors seek safety. Historically, that safety is found in gold. Gold doesn't rely on government promises or company earnings. It doesn't default. In times of uncertainty, capital flows toward stability. Every major war cycle in modern history has coincided with strong gold performance. It's a proven hedge. Now, let's talk numbers calmly. $6,000 gold may sound extreme, but consider long-term monetary expansion and rising global debt. Governments expanded balance sheets. Debt is high. If currency purchasing power erodes, gold repricing becomes possible. It doesn't need panic. It only needs sustained demand and reduced trust in fiat stability. Silver becomes even more interesting. It's both a monetary and industrial metal, benefiting from safe haven and industrial demand. If tension disrupts supply chains, while green energy demand remains strong, silver faces a supply-demand imbalance. That's where projections like $120 silver enter serious discussion. Silver moves more aggressively than gold in strong bull cycles. But this isn't hype. It's about understanding pressure points in the global system. War escalation increases uncertainty. Uncertainty increases hedging. Hedging increases demand for precious metals. Oil volatility increases inflation risk. Inflation risk reduces real yields. Lower real yields historically support gold prices. These are connected mechanisms, not emotional reactions. Now consider central banks. They've been accumulating gold at one of the fastest paces in decades. They're diversifying reserves, reducing currency risk. Institutional demand aligning with retail demand strengthens gold's structural floor. The shipping issue adds another layer. When tankers are delayed, markets react to potential shortages. Futures markets price in uncertainty quickly. Even temporary disruptions create volatility spikes. Volatility drives capital toward defensive assets. Investors managing billions don't wait for headlines to calm. They move early, positioning strategically. Is this the start of a super cycle? It's too early to declare, but the ingredients are visible. Rising geopolitical tension, fragile supply chains, elevated debts, central bank gold accumulation, and persistent inflation. When multiple macro forces align, markets can move in ways that surprise even experienced analysts. However, smart investors remain calm. They don't chase spikes blindly. They assess allocation and manage risk. Wealth protection is about positioning strategically, thinking long-term. Diversification matters more than ever. Assets performing well during stability aren't always the same as those performing well during crisis. Another factor overlooked is currency confidence. When trade routes disrupt and energy prices spike, emerging market currencies weaken. If confidence in paper currencies declines, gold demand accelerates. Gold is priced globally, reflecting worldwide stress. Silver's volatility can be intimidating, but historically, it rewards patient holders during strong cycles. When gold breaks major resistance, silver often follows with amplified moves. Analysts discuss triple-digit silver. Now, let's talk psychology. Markets move on expectations, not just reality. Investors price in risk ahead of time. That forward pricing drives powerful trends. Momentum builds, media attention follows, and retail participation increases. But remember, corrections are normal. Even in powerful bull markets, pullbacks happen. Having a plan matters. Decide your allocation. Understand your time horizon. Avoid overexposure. Think in probabilities, not certainties. The current situation with tankers and escalating conflict reminds us how interconnected our world is. A regional event can influence global commodity prices within hours. Digital markets react instantly. If gold approached $6,000, it would reflect deeper structural currency adjustments, not just a short-term spike. If silver approached $120, it would be during strong inflationary or stagflationary phases combined with industrial demand strength. At Safe Haven Wealth, our goal is simple: clarity over noise, protection over speculation. We analyze macro trends calmly so you can make informed decisions instead of emotional ones. Staying informed is a competitive advantage. As we move forward, watch 3 indicators: oil volatility, central bank gold purchases, and real interest rates. When oil is unstable, inflation expectations stay elevated. When central banks buy gold, structural demand strengthens. When real rates decline, gold's opportunity cost decreases. These factors signal major moves in precious metals. The world doesn't need full-scale global war for markets to reprice risk. It only needs sustained uncertainty. And right now, uncertainty is clearly rising. That doesn't mean panic. It means preparation. Stay calm, stay strategic. If you found this helpful, let me know your thoughts in the comments. Do you believe gold can reach $6,000? Could silver see $120 if tensions continue? Your perspective matters. Share this video with someone who follows gold or silver. Thank you for spending your time with Safe Haven Wealth. Protecting wealth is about preparing for possibilities before the crowd sees them.